Okay. Well, thank you everybody for being here. And of course, I logged in about an hour earlier so I could hear Rob talk. He's always got some incredible insight to the market as well. And thank you for everybody who's here for putting on this great event. Of course, for Traders Talk, we're going to launch straight into things. Right now, we are in a very, very interesting market. We're going to jump right into the live markets in a moment. For that reason, of course, a standard disclaimer that this is for educational purposes only, and trading does involve risk of all you invest. So always advisable to speak to a registered financial advisor before taking any action. And what we're going to talk about today is about following the smart money. I'm a huge believer in the idea of following where the money is going, and the way that we do that is by really focusing on two key principles that I've been following since Acorn began 10 years ago, and that is, number one, what controls the market? These days, they estimate 80% or more of the volume in the market comes from high-frequency trading and other institutional type investors. In fact, JP Morgan recently reported that they estimate that under 8% of the volume in the market now comes from discretionary investors. So we can try and outsmart them. We can try and spend all of our days researching what we think is the next best thing since sliced bread, and try and out-research, the flaws and flaws of professionals at Goldman Sachs and the like, who are experts in these fields. Or we can do something much simpler. We can simply watch what they're buying, let them do the research. And we may not know what they know, but we can see how they act, and that tells us a lot. So our focus and my focus as a trader is to follow the smart money. And so we're going to be talking about what those smart money systems are doing now and how we can use those to anticipate fairly explosive results. That's what Acorn's all about. The way that I trade, to tell you a little bit about myself, I'm a set and forget type of trader. So I believe that if you know what you're looking for, and knowing what you're looking for, of course, comes from having systems, proven systems that you've used, that other traders have used, that work. Then, if you know what you're looking for, you can automate how you find that. And then, if you know what that pattern should suggest, where it's going to hit and where it's going to exit, you can also pre-program these types of things so that you can go back to money working for you in the market versus you working for your money. And that's I think what attracted me to trading was I thought, hey, what a great idea. Let's put my dollars to work so that they can make me money while I get to have my time to do whatever else I want to do. A lot of traders forget that that's what investing is about, is money working for you. And so the principles that we teach are very much more of a swing trading, and can also be day trading type of strategy, where you find these setups, set them up, and forget them. So rather, this was my office. I was fortunate enough to spend 4 months living here. Now, we had this entire place down in Costa Rica for $800 a month for that. And everything you see there, we're the only people living there. And I mean, that's the kind of thing that you can do when you don't have to work for your money anymore, and you've got these types of things in place. This is where you can be doing your stock research. This is actually a picture from Mexico, doing that type of research, setting and forgetting. And that's the type of strategy we're going to talk about. So let's get into the bits and pieces. Right now, we are in a very dangerous market. I think we all know that. The talking heads on TV have been calling for the market to crash since February of last year. So we know that these threats exist. Of course, as with anything, it's not just about having the idea, it's about having the timing. But I do want to talk about, a quick slide on what the threats are. Obviously, we're overbought in the markets. 9 out of 10 of the sectors are more expensive than their 10-year average, than the 10-year levels. So we're at record levels of being overpriced. This chart here is actually from the Hussman Strategic Advisors, and they put together this Shiller P/E ratio chart, which basically talks about how much a company's valued at versus how much money they actually make. And as you can see, this shows us that we are, based on these calculations, at valuations in the market higher than we have been since 1928. So if you want to talk about peak exuberance, This shows it in a nutshell. If you look at all the big crashes we've had, the tech boom in 2001, if you look at the housing crisis in 2008, both these markets underwent huge corrections because of one sector being overweight. We are now talking about 9 out of 10 sectors being significantly overweight. So these are the threats. But I'm not much of an economist. I'm not here to talk about yield curves and the state of the economy. In fact, I try to stay as far away from economic theory as possible, because really, as a technical analyst, I don't want to hear about the stories behind it. I don't want to hear about the rationale. I just want to look at where's the money going, because much brighter people than me have done this research already, and they're reacting in the market, taking their money in or out of areas, and that's what I want to follow, because that's going to tell me the truth versus the opinions, which are full of opinions. So what I'm getting at is the charts tell the story. So let's look at a couple of really important charts that that we've been watching over the last little bit. So firstly, let's start with the S&P 500. So the S&P 500 currently is in a has been in an upward channel for the most part of this. Let me just get this off screen. I'll redraw this. As you can see, what we've been in is this kind of upward channel on the S&P since, well, pretty much since the beginning of the year. Now, for those of you who study technical analysis patterns, you'll know that an upward channel is bearish. Statistically speaking, when you see an upward channel, you are waiting for, after 3 touches of the support line, it should break down. That is the statistical probability. And as traders, that's what we want to see. What is the probability? How do we trade it? So an upward channel is something we watch, and when we see that building over a period of time, we're then waiting for the breakdown. In fact, if you, so I'll come back to that. But what you can see here is we have actually broken above the upward channel. So when an upward channel fails, what does that mean? Well, what it means is that a even more bearish pattern is building. It's kind of like pulling the elastic band back even further, which means it wants to snap back down and behave like it should as an upward channel. In fact, if you look at the crash of 2008, and we go back to all of these major corrections that we've had, you'll see that same pattern here. We had an upward channel from 2004 all the way through to 2007. It broke above the channel, breaking the rules, and formed an even more bearish pattern, which was a head and shoulders right at the top, sitting on top of that channel. That head and shoulders then broke sharply down, giving us our target of 1250. It then formed another head and shoulders and broke down to the target of 1,000, and then it actually formed an inverted upside down head and shoulders at the bottom, which was the recovery of the market. So whether you were an economist or not, whether you even listened to a bit of the news or not, the crash of 2008 was actually a very well organized technical formation. And if you understood channels and head and shoulders properly, this was quite predictable, and this was actually the second year of business for us, and this was one of the crashes we were on top of, and we warned everyone that we were getting out of the market prior to this crash, and it was a lot to do with following systems like this. So the smart money, the high frequency trading, was already planning for this crash from April 2007 onwards, when this head and shoulder began. You can see that we've had 2 other 10% drops in recent history. We had one in mid-2015 where the market dropped 10% from August 7th onwards. Once again, this was an upward channel that broke down 10%, rallied back up to resistance, broke down another 10%. Excellent shorting opportunities. So where are we at now? Well, the pattern, which of course is very important because this is where this 80% of volume comes from, is suggesting that once again we're in a scenario where the S&P 500 has broken above its channel. And this has been going on since the beginning of October. That breakout really started occurring on the week of October 6th is where we're at right there. Okay, so smart money-wise, when we consider the pattern, which is very important, the pattern tells us the market is gearing up for a bearish, a quite strong, potentially bearish move. That's checkpoint 1. Let's go to checkpoint 2. Let's look at, are there any other smart money indicators that correlate with this setup? Okay. Well, let's firstly get some definitions out of the way. A lot of people talk about where the market is going. You heard me say that just a moment ago. What's the market doing? Where's the market going? When will the market correct? But let me remind you of something. It is not a stock market. It is a market of individual stocks. And just remember, in 2016, a third of all of the market's gains actually were accounted for by 6 companies. So don't get fooled into thinking that your money is safe simply because the S&P 500 is going up. There are a lot of different things going on right now, and there are a lot of stocks that are great shorting opportunities that have crashed 50, 60, 70% in the last few months, which you would have missed if you were thinking it was just a bullish market. So let's look at the stocks actually in the market. And what you can see here is a graph of the stocks in the market. What percentage of them are above or below their 50-day moving average? Okay, 50-day moving average being a fairly important support line. So if you look back historically, you'll see this percentage. And every single time we've been at this level, up to the 80% of stocks above their 50-day moving average, you'll see every single time stocks, individual stocks, have started crashing from this area. In fact, all the way back to 2010, we can go back even further, you'll start to see this data, all the way back. There's only been 1, 2, 3, 4, 5 times it went higher, and it lasted for 3 weeks and then crashed again. So the way we've been approaching this market is we've been watching this indicator, watching this indicator and watching it rally all the way up to this 80% mark as a warning sign of when things start to get toppy and start reversing. So when you look at this indicator, it has been within a 3-week time frame 100% accurate since 2010 on predicting where things roll over. So that was our call on the market. When we got to, let's go to a daily chart now, you'll see that when we actually reached this peak market was actually, again, look at the date, October 6th. The same time that the S&P 500 broke out of its upward channel, which is a bearish break, something leading up to a bearish move, at the same time the market broke higher, this is when this indicator started to roll over. And in all market crashes, this indicator has dropped like this before the overall market starts to plummet. So that's another thing to be aware of. Okay? Let's also look at something else. Let's look at the Dow Jones Transports. Dow Jones Transports is obviously a key indicator of how the economy is going. I mean, if things are good, people are shipping things and so forth. If you look at the Dow Jones Transports, what you'll see is that we're actually building a head and shoulder. One, right? We've got a head and shoulder on the Dow Jones Transports. Again, the most powerful bearish pattern in a bull market. So this is also telling us we need to be very concerned. And one more divergence I want to show you. Perhaps one of the most interesting of all, high yield bonds. Now, high yield bonds are something that are a great indication of what smart money thinks of the stock market. Let's get these moving averages off. a great indication of what smart money think about the market. Because essentially, if smart money believes that this economy is fantastic, we're on a huge growth period, the corporate America is in great shape, this is the time to be buying equities and investing in companies. What they'll be happy to do is buy corporate debt. And that corporate debt, with the belief that it'll be paid back, that companies will survive, comes in the form of these high yield bonds. So if smart money likes risk in the market, they'll buy these. These will go up. If they do not believe in the market, if they're terrified of it, if they think this is not the best place to be, these go down. And the pattern that's actually been forming on high yield bonds is once again a head and shoulder. So we actually, Acorn made a prediction on this market again on October 6th, which is when the because you can see how I'll draw a line on that date, right there, when we broke out of this downward channel and then kind of bounced around on the top here. We predicted that this was going to form a head and shoulder then, and we predicted a target of HYG to fall to 86.30 and then rally from there. So 2 months ago we made this prediction, or a month and a half ago we made this prediction. As you can see, that's actually followed through to the precise levels we anticipated, which makes me, again, when all these start to come in line and basically follow the line we drew out on our chart back on October 6th, this says to me this is working far too well. I mean, this is almost perfect. And so this makes me worried or excited, depending on which way you look at it, that we are heading up towards this head and shoulder pattern, which then would suggest a breakdown from this 88 level all the way down. And we'll just draw that extension on. There's the head and shoulder. So we're looking at a breakdown towards 84 on high yield bonds. Now, what's the relevance of this level? If you actually go back and look historically, the last time we were down at 84, this target of where these high yield bonds are, was back in November 16th, 2016. Does anyone remember what was happening in November of last year? What was the event of any significance happening back in November? The election. And if you remember, this was a point of peak fear for the market. We had a flash crash where the market was down over 1,000 points when that election was going on. So we're dealing with now this is not an event-driven drop. This is just overall market fear, not one fear of who's going to become president or not, but just the state of the economy that's driving this. So these are some very, very interesting factors. So rather than starting to look at where's the market going, well, the market's already been crashing. We've already had over 45% of stocks break their key support levels. So so what does all this mean? You know, how does this relate to today's discussion? Well, obviously, all of these factors could be wrong, but the fact that these factors, when they've all lined up before, historically have had a 85–90% plus probability of a minimum 10% correction, and they're all saying these same things now, and the patterns are lining up. I mean, it's just too much to ignore. So does that mean I'm going to suddenly short everything with a ticker symbol tomorrow? Absolutely not. In fact, I still have quite a lot of longs. I took 4 new longs this morning. But what it does mean is that we need to prepare. We need to be very, very conscious of what types of trades we're taking. These aren't just normal markets where we can take any kind of setup that seems like it could make us money. In my opinion, this is where we need to really sharpen our swords and get a really sharp edge, so that if we're going to take a long, it's got to be a really good long. A long that if the market went down 2 or 3% next week, it would still go up. And that's really what Acorn focuses on. We're trying to find the salmon swimming upstream. We're trying to find the longs that have such a very strong story and such incredible smart money behind them that that they do not follow the market. They're not going to correlate with it. They have a safety net that even if the market drops, these could still go up 10, 15, 20%. And at the same time, we want to start looking for the shorts that are already dropping now, because the market's bottom has already fallen out since October 6th. These stocks have already started dropping. So as well as looking for these very strong longs, let's also look for the opportunities where the really weak, where are those really weak stocks that are already crashing. And if you wait for the market to drop to start looking for those, you miss all the good ones, because the best shorts, the weakest companies, are going to drop first before the S&P goes down. So these are the ones you want, the weakest stocks. So how do we find them? How do we look for these types of things? Well, this is where we start to get into looking for the smart money. Okay, let's just bring that up. Sorry, I hit the mute button there accidentally. Okay, so basically what we're talking about is a simple strategy where we get away from all of this noise and start replacing this with a much, much simpler way of finding high profile, high probability trades. So let's talk about these. The key things of finding these trades is obviously, as I mentioned at the beginning of today, of looking at where is the smart money going. All right? And there's two things we want to consider. One, what is the pattern? Because the pattern is going to explain essentially the roadmap of when we get in, where we get out, where is our stop loss. Patterns are the roadmap of the market from a market maker standpoint. You know, if you look at the fact that the entire crash of '08 was explained by one channel and 3 head and shoulders, and people said, wow, what a chaotic time, how could anyone have predicted that? Well, you could have, if you understood channels and head and shoulders, you could have outsmarted all the talking heads on TV by simplifying it down to watching what the smart money was doing. And they act with the guidance of patterns, pre-programmed algorithms. That's the first thing. Let's understand the pattern. Secondly, let's reinforce the pattern just by not looking at where the high frequency trading and smart money is going, but let's actually look at the smart money themselves. Let's look at the insiders of these companies. So when we see that the pattern shaping up for a great rally or a great drop, let's make that even more powerful by searching for these patterns where the insiders themselves are loading up or getting the hell out. So if we can combine these two things, we truly encompass some of the most valuable parts of analysis, which is watching where the two most powerful and knowledgeable players in the game are going. And that matters to me way more than anyone, than any kind of opinion or talking head or a friend's recommendation. This is showing where the true money, what they're thinking. So if we start to break down and have a look at how we do this with some of these setups, I want to share with you how this works. Okay, so let's look at the first example, MRTX. So this was again, what we're doing is we're saying, okay, dangerous markets, so let's look for incredibly strong stocks. So MRTX was one that we alerted to our students back on August 21st. The reasons behind it, the rationale, walking through this process, is that there was huge increases in buying activity. As you can see here, we had the president and CEO increase his position by 70% with his own cash. So he said, right, and as you all know, insiders only, or anyone really, only put money in their own companies for one reason, because they think it's going to make them substantially more. You know, they already get a good salary, they already probably have stock in the company, so they're putting even more in because they are excited about a big money-making opportunity. So the CEO loaded up put an extra $141,000 in. You had the 10% owner who threw in 1.6 million. You had the other 10% owner who throws in 3.2 million, and then continued to add to that position all throughout the beginning of the year. And as you can see, with about an average price of around $5. So fast forward to today. Let's have a look at where MRTX went. So there you go. MRTX consolidated for a while around this $5 and then skyrocketed and has closed all the way up to $19 now. This is not a coincidence. You know, this is heavy buying with very strong conviction in terms of the percentages that they were buying. And lo and behold, they've added millions of dollars to their bank balance. Okay, the pattern was beautiful. You know, you had this lovely downward momentum where the stock was bouncing off the moving averages this entire time, a beautiful downward momentum system that was then broken right there in June. And of course, again, consolidation, and then broke out again. And of course, this was why we alerted our students to it there at around $5 before this rallied up. I want to point out one other thing on the chart as well. One other thing that we'll now consider. What you might notice at the bottom of all of my charts is this green line. And what this line is it's a smart money indicator that I use on every single trade. It is the most important technical indicator I use, and it is the only one I use for these types of setups. Because what this does is it actually really looks at whether the smart money is buying or not by looking at if what the volume's doing. Is volume going up as price goes up, or is volume going down as price goes up, which is a sign you don't want to see if you're going long. So is volume moving with price? Is the stock making higher highs and higher lows? Is the stock closing in the top half of the range? What type of range does it normally trade in? Is it getting a better and better average true range? All of these different aspects, which people typically litter their screen with indicators to find, are all being taken into consideration in this one indicator. So it's a very advanced money flow indicator, and one that is a key thing that we look at. So as you can see, when we spotted this fantastic pattern and we saw that there was great insider buying, we also took a look at this indicator and saw that even though price was no different to what it had been all the way since January, the smart money indicator had been climbing extremely strongly leading up to that buy signal. And that was just all three things lining up perfectly. Perfect pattern, perfect insiders, and the smart money indicator was a slam dunk. And as you can see, that transpired into a fantastic move. There's been tons of these. TRXC has been in the news a lot. This was actually, these were back-to-back alerts we sent them out. If you've been following us for a while, we sent this video out. The first alert was MRTX, and the second one right after it was this stock. Two slam dunk setups on the same day. Again, same stuff. Look at the insiders. Director adds 208% to his position. I mean, don't worry about the dollar figures because you don't know how much money these people have. They might only have 50 grand in their bank account. So it's the percentage really here that matters. They've gone and tripled their position essentially. And then you've got the other director adding 150% to their position. Then you've got the director here, 278. Then you've got a $5.2 million buy there. All of this between $1 and 54 cents, basically, if you average it out. Basically a buck, and millions of bucks coming into the stock. So what do you think happened next? Well, let's bring up the chart. Insider buying, insider buying, insider buying. Stock goes from $1 to $5. FDA announces that they're approving their robotic surgical arm for stomach surgery, basically. There's only one competitor in the market. It's been around since 2008. Their stock has gone from $8 to $350. TRXC suddenly gets approved, and as you can see, the stock skyrockets. Insiders buying. Again, look at that perfect pattern. Downward momentum, breaks it, nice little ski jump, consolidates, and there you go, breaks that consolidation. Again, why we alerted our students to it. And look at the smart money indicator down the bottom. The whole time that stock was going sideways, the smart money indicator was showing you that they were accumulating more and more and more. And that line tells you at a glance that that's what's going on. Again, a beautiful setup. So our approach was then to sell that. That's a little snapshot from my brokerage account. So I took a position in that and sold it off at $4.40, $4.18, and $4.38. Nice little, roughly about 10 grand profit. And as you can see, that was right as it hit that resistance at $4.40. Nice little easy trade. I have bought back into that, by the way, for full disclosure purposes, and because this is because what I'm talking to you about here is stuff that we follow. This is stuff that we use. Let me show you some more recent ones. There's a lot of these. FRTA was a more recent one. FRTA, again, same stuff. Let's go to the chart. FRTA, again, beautiful drop. Broke through the momentum and then just started building, and you can see the smart money indicator down the bottom. As the stock went lower in price, the smart money indicator was going higher in levels. So again, another excellent trading opportunity. If we go and have a look at the insiders themselves, here we go. FRTA, have a look. 30% increase, 88% increase, brand new buyer, 1,000% increase, brand new buyer, 279% increase, 59, new, 50, 11, 92, 132. Tell me that doesn't indicate that they know something. You know, I mean, this is just right in your face. This is stuff that is available that tells you that the smartest people, the ones that know their company inside and out, are all for it. They're in for a penny, in for a pound. Some people that have never put money into the company, now all of a sudden, this is the time, along with the people that know the most, loading up in triple-digit percentages. And as you can see, stock suddenly breaks out, goes from $4 to almost 10. And again, this is stuff that I trade myself. This is not just hypothetical things from, you know, that the system could do. I put, as you can see, I put eight grand in this at $5.40, and sold it just a couple of days ago at $7.89, up over 50%. And the beauty about this is this took me no more than about 10 minutes, the whole process. Scan for it, scan for when this pattern was occurring, where the smart money was loading up and the insiders were buying in droves. This was one of the first stocks that came up in my scan. I saw it, I looked at it. It took me 2 or 3 minutes max to say, yep, hey, that meets all of my rules. I didn't care about what the market was doing. I didn't care about what the market was doing. All I saw was that all of the smart money indications were saying that this is a very probable, powerful breakout. So I went in, I looked at what price would be the trigger and what price would be my exit, and that was the last time I touched it. So on October 11th was the last time I did anything with that stock, and about a month later, I got a notification email saying that I just made about $4,000 for 10 minutes of work. That's not bad, is it? Set and forget, because that was that is the whole strategy. What else have we got? I'll show you one more. How much time we got here? We've got about 10 more minutes. All right, so TTI, another example. Let's go through the setup. TTI. Um, Again, same thing. Look at this stock as it gets punished. Comes from an oscillating channel previously. It broke down, which warns us of a even more bullish move on the way back up, because downward channels should go up. So it's like, again, pulling that elastic band back. It drops, it drops, it drops, forms that nice little ski jump. I mean, again, you'll see that these all look very similar. Same pattern, same principle, keeping it simple. Breaks through the moving averages, bounces on top, bing, 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 starts to break out of that consolidation. And as you can see, look at the smart money indicator, just going absolutely off the charts. By this point here, smart money was already at 10%. Last time it was at 10%. The stock was at $4.50. Now we're at $2.50, and the smart money is at the same level. That's a key divergence. That's giving us an interesting sign to say, aha, let's look at this. Once again, let's look at what the smart money was doing. So we actually had insider buying, I think it was a couple of $1 million right here in March when the stock was at $4. So again, this was an indication for us to get in. Again, I eat my own cooking. So when we sent this out to our students and said, hey, we like this, I had my own money in it myself. I put $6,800 in this one at $2.81. And when it rallied up, I had two targets. I sold half at $3.43 and the other half at $3.98, bringing in a total of roughly, what was it, about 8,000, 9,000 back. So again, about a $3,000 profit. Once again, my buy target and my two sell targets were set on the 27th of September. After the 27th of September, I didn't touch it ever again. Set and forget. And I got a notification when it rallied up and hit my 383 target, which was, again, as you can see, close to the top. I was out. I've been paid very well for my 10 minutes of work. So these are the kinds of things that we look for. And it's not just in the long direction. You know, it's also in the short direction. I mean, I could show you trade and trade again. JASN, same thing. We picked up 41% on that. I mean, we don't have time to go through all these examples, but let me show you a short scenario. Here's Blackhawk Networks, and this was a great crash. You had this perfect pattern of this massive head and shoulders that was building. Not only that, but this was a really interesting setup. Not only did you have one head and shoulder here, you had a second head and shoulder there, inside the head and shoulder. So you had a head and shoulder inside a head and shoulder, and then on top of that, you had a pennant formation. It was a head and shoulder and a head and shoulder and a pennant, all basically predicting the same drop, the same target. So this was an obvious setup. You had one setup inside the other. It's kind of like the Russian dolls. You know, it's just one pattern inside another pattern inside another pattern that all say the same thing. Short the thing. And look at the smart money. Again, the smart money was selling millions and millions of dollars. And it wasn't just one guy. It was a senior vice president, the chief accounting officer, the CFO, the chief admin officer, the president and CEO, you name it, general counsel. I mean, they're all saying, hey, I don't want my money in this stock. And they were selling big percentages. And of course, what happened next? Oops. What happened next? The stock dropped from $45 down to 33. And if you're an options trader, you know how much that makes you if you're in something like that, or even a stock trade. Again, all the research you needed to do here was what was the pattern, where was the smart money going, and once again, if you look at the chart, you can see the smart money was plunging. So this is basically what I do all day long. This is, well, not all day long. This is what we do for all of the setups that we look for. Again, I could show you a lot more, but and there's several that I bought just this morning. You know, what's the I think, let me show you one of them. Well, I mean, look at the rally today on HIB. This was one of our recent smart money picks. HIBB. HIBB just rallied up from $14 to $18 today. Again, look at the pattern, same thing. Long downward momentum, breaks through the moving averages, and then just starts to create that little ski jump. Look at the smart money indicator. Look at that beautiful smart money indicator going up, 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 up as the stock goes sideways. And look at the insiders. HIBB. Again, 29%, 61%, 3%, 78%, all loading up just right recently in August. I mean, this is undeniable stuff where the research is being done for you. The trade setup is as perfect as it gets, and gives you an opportunity to jump in. So that's what we do. Is look for these things on an ongoing basis. I believe that this is a very dangerous market. I believe this is not a market where you can just go and trade anything. You know, we really need to define, you know, what is the perfect storm, what is the strongest possible opportunity, and to me that means following where the money is going, because the smart money is ultimately what makes the market. Volume dictates price, and who dictates volume? The smart money. So that I want to be on their team. I don't want to outsmart them. I want to know what they're doing, and this is what this strategy does: is it targets that. It locates when they're doing this. If you're just simply, you know, stumbling around looking for good ideas and hoping something hits you in the face, it may, and you may get lucky, but it's not going to give you consistent results. And for me, that's what trading's about. It's about consistency. It's no good making 100% one month and losing 100 the next. You can never build an income around that. You certainly can't pack your laptop up and go travel the world for a few months expecting to live off your income if you don't have consistency. If that's what you want to do, I don't know what your individual goals might be, but without a strategy, you're constantly going to be going in every direction. As I say, if you don't know where you're going, any road will take you there. So this is the key thing: is looking for efficiency. And trading is about efficiency. Again, for me, trading is about making your money work for you, not working for your money. So again, when you can develop a way to, when you develop an idea of what you're looking for, you can start to pre-program a way to find it, rather than spending a lot of unnecessary time just wandering through Wall Street. So this is the whole focus of what we do: is we develop scans to find when exactly these things are happening, so that we're not wasting our time, wasting our capital, and missing opportunities. As I mentioned, that's the whole focus of what Acorn provides. So we are, as I said, we are coming into what could be a very interesting turning point in the market. So in the interest of today's special event, this is the first time I've been on Traders Talk Live, which is exciting, and we've obviously had some incredible speakers. So we've given you an opportunity here to see this in action. I mean, I can talk all about these trades I like. Hopefully you can see, again, these are things that I put my own money in, and we want you to be able to be a part of this over the next month. So we've offered a smart money setups package that will basically get you started with everything you need to follow along with what we're doing. For $9, you'll be receiving our top setups on a daily basis delivered to your email in the format of a 5 to 10 minute video summarizing our thoughts, summarizing what setups I'm going to be buying or looking to buy, where I'm buying it, where my stop loss is, where my exit target is, what the insiders are doing. We'll also be giving you our smart money indicator that you saw on the screen, that green line down the bottom. You get that as well. That is invaluable. That's programmed in Thinkorswim, TradeStation, TradingView, Incredible Charts, Metastock, TC2000. If you have a different program, we can give you the stuff. That you get a video on demand on how to use the smart money indicators. And again, this is basically a bit of a summarization. Again, all sent to your email on a daily basis, written report, video report, And we also do a live online trade room every Tuesday, Thursday night at 7 p.m. Eastern, where we go through all the research and rationale behind what we think is happening in the market. We've only got a minute left here, so I'll quickly give you the bonus as well. The bonus. We are, as I said, high yield bonds are setting up in this head and shoulder. Dow Jones Transport setting up in the head and shoulder. So this next 6 weeks could be perhaps one of the most exciting periods we've had in the last few years. So we're going to be putting together a very special weekend report, which is going to be focused purely on our favorite insider setups, our favorite longs, our favorite shorts, where the insiders and the patterns are setting up perfectly. These are coming from a watch list that I've spent the last 6 months building, essentially, and going through and giving you all of these entries and entry and exit levels, any options we're considering for where these most powerful setups from this type of strategy are coming from. So you receive all of this for $9, and the idea is to really impress the pants off you so you can see what's achievable following this strategy. So I hope you'll give that a go. It's from a risk-reward standpoint, you're risking $9. The potential is unlimited, especially if you think that what I've been talking about today holds any water. So with that, again, if you enroll today, you'll be getting that report when we send it out over the weekend, and that'll be a great start to really kickstart the next few weeks for you. Thank you again to everybody at Traders Talk, and again, thank you everybody here for spending the last 45 minutes with me. I'll pass the mic back over.